So, Mr. Larry Williams, it's an honor to be here with you and to be able to interview you and share all your secrets over the last 60 years, which is staggering. I've been trading for 32, 33 years, and I think that's a lifetime, and you are double my trading experience. But just for the audience, I want to introduce Larry before he introduces himself. But Larry has created numerous market indicators, including the Williams percentage R, the ultimate oscillator, etc. Things I've been using since the 90s. In fact, he focuses heavily on accumulation and distribution, cycle forecasts, market sentiment, value measurements, etc. But your biggest claim to fame is you won the 1987 World Cup Championships of Futures Trading, where you turned $10,000 into 1.1 million, or was that 11,300% in a very short window of time? I think it was 12 months or less, and many other things. So first of all, Larry, how are you this morning? And did I catch anything wrong in that quick intro?
Well, I'm getting ready for maybe a hurricane here in the U.S. Virgin Islands. I don't think it'll be that bad, but we have a storm approaching. So everybody's battening everything down, and we're inside looking at the markets and getting ready for a bit of a storm, just as there's been a storm on Wall Street.
It has indeed. By the way, are you a sailor by chance?
No, I have friends that have boats. Those are the best friends in the world. I've had boats, the two best days in your life.
Oh, I know all about it. Yes, I've had a couple myself, and I changed all that during the beginning of C19. What an interesting time. So let's first of all, let's start at the beginning. I've got so much that we want to learn from you, and the audience wants to learn from you, and I regard you as a legend. So the first big thing is I always say fundamental analysis first. TA, technical analysis, technical trading, kind of times your entry. You sometimes say TA, technical analysis, is voodoo.
I think a lot of technical analysis, I think, of mumbo jumbo or voodoo, whatever word you want. Some of it can be very helpful, but there's so much stuff out there that's just like, it's nonsense. Like, get away from it, run away from it. Fundamentals do matter. Prices go up for real reasons.
Excellent. So you and I are very much aligned on that, which is great. But it's clear that markets are driven by fundamentals. I think you've said that many times as well. Things like macro trends, cycle, volatility, seasonality. They are also key before you start using kind of TA. What's your view on fundamentals and how you view all of that stuff? Where would you place the most importance? Is it cycles? Is it macro? Is it seasonality? Like, we live in this world where we are under the cloud of the Fed. It's like everything is dictated by the Fed. But what's your take on the world?
Well, the bottom line is I think that prices go from here to here for fundamental reasons. They go like this for emotional reasons, emotional news, technical, whatever. So if you have this picture from here to here, you have a lot better idea. You want to buy the dips and sell the big rallies. Or if it's the other way around, it's just the opposite. So the fundamentals cause these things to happen. Charts just show what happened. They really don't tell you what's going to happen. The reflection of the past. To look at what's going to happen in technical analysis, very few indicators do that. Accumulation, cycles, a lot of the data from the Federal Reserve System. I've been working with some today. It's amazing the data that's there. We can learn it. The Federal Reserve, a lot of people hate them. They're a storehouse of knowledge.
Yeah. In fact, I find myself over the last year spending a lot of time looking up things like M2 money supply and GDP growth and debt to GDP ratios and all of that type of stuff.
Or they have some articles on how the moon influences stock prices. They have articles on how geomagnetic storms from the sun influence stock prices. You can find almost anything you want at the Fed's restaurant.
Well, that takes us into the whole astrology thing. Do you believe that the moon does impact trader sentiment and stock cycles?
Well, based on what I've read, I think it does. I don't think that's astrology. I think that would be astronomy. Big difference. I have no idea about astrology, but I think there is an influence. I've demonstrated in my research, as has the Federal Reserve, has the University of Michigan, a couple of papers on it. But enough to make money on trading? I don't think so. That's the problem. There's a little influence, but not enough to be consistently profitable.
Awesome. Trend is something that I look at a lot. They always say the trend is your friend. Tell us a little bit about the importance of trend to you, and what timeframes do you like to assess a trend, if you can find one, or how you even find trends?
I think that's a poignant question, because when I was younger, say when I did start trading in 1962, my time frame was much different then. Not only was I younger, but also then the Wall Street Journal came a couple of days late. Things moved real slow. We didn't have internet. We had no idea what was really happening stock prices till a couple of days later, because I was in California at the time. So a big difference now that the cycle of news is picked up and it's instant. The time frames change a little bit, and as you age, I'm 80 years old now, so I'm going like, do I need another day trade? No, been there, done that. I had a lot of those. So my time frame, I think, changes with your age, with the news cycles. But for me, the optimum time frame really has always been somewhere from 3 to 12, 25 days. I did hold the trade one time for 6 months. I forgot I had it on. But that's in terms of futures, I'm much of a short-term trader.
Interesting,
but not a day trader.
Very good. In fact, I used to be a day trader, then became much more of a swing trader. I found the longer the time frame, the higher your probability of success for me. But lately, with the extreme volatility and the movements around things like social sentiment and the internet, I find myself sometimes scalping for fun. And I've never thought I'd ever see the day, but I sometimes look at 1 second charts.
Well, as you mentioned, the trend is your friend until the end. But the real critical point here is what causes trend, because without trend, you're not going to profit. It doesn't matter if you're a day trader or a long-term trader. You've got to have trend. So what's a function of trend? It's time. The more time you can have in a trade, the more trend you can get. Yes. So I really like time. Time's my ally, it's not an enemy. So I don't want to hold over during the day because I can't catch a major trend move, which is really money management, because if I can catch a major trend move, I can have a very small bet and make a lot of money. If I'm wrong, I'm not going to lose very much. But for day trading, at least the way I've done it, to make a lot of money in a day, $5,000, $10,000, you've got to risk that much or more. So the mathematics of it is that I need trend, I need large trend moves, so I can have relatively small bets and hopefully a large profit.
Excellent. So let's talk about cycles for a second. Q4, historically, we're going into Q4 2022 right now. Historically, it's a bumper quarter. We're beaten to hell right now on the S&P 500. I've never seen, I can't remember in over 30 years, so much negative sentiment. And I'm not sure why.
I love it. I love the negative sentiment. I just love it. To walk down Wall Street. I remember being a kid in 1962. And Wall Street was so bad in 1970 in San Francisco. People were, they're all dour. Like, this is a sign of a bottom. Just need to buy stocks and put them away. So I love to see the purveyors of pessimism when they just flourish like blossoms on a bush. Like, there's a big message there.
I love that. Purveyors of pessimism. Do you have a trademark on that, or can I use it?
No, I've been using that for many, many years. I wrote a book, How to Prosper in the Coming Good Years, in 1982. In Refutation of Howard's Rough, How to Prosper in the Coming Bad Years. And that was like, I came up with purveyors of pessimism then, and you're more than welcome to use it because they're there. I've known these bears, the consistent bears, and I have friends in the business. And I was asking, how can it be wrong for so long? He said, it doesn't matter. My people don't care if I'm wrong. They want a bearish viewpoint. Mm-hmm. And they believe the world's going to fall because of right wing, left wing, middle, whatever their philosophy is. So they want this reinforcement. They want this cognitive bearish bias. They like it. We all like bad news. I love bad news. I like to know my brother-in-law is not making money and I am. I feel better about it. We all love bad news. So it's part of that syndrome that we all have.
Exactly. And maybe it's also related. I think a lot about the psychology of investing. I think it's very important. And I remember the old adage from a long time ago that fear sells. Is that the same with pessimism? Does that sell more? in your opinion?
Clearly, I have my degree in journalism from the University of Oregon, and as it was explained to me back in the 1960s, was if it bleeds, it leads. So you never hear about houses that didn't burn down today. One house burned down, but in New York City, 11 million houses didn't burn down today. But people aren't interested in that. They really like bad news. They like to be excited about things and to say things are really good right now. It's like, I don't want to hear that. I want something that's, if it bleeds, it leads. And that's true. We all like a little excitement. The other side of that, Martin Luther King said that America is a 10-day nation. And what he meant by that is that whatever the news is today will last for about 10 days, and then some other news will come up. So these news cycles for short-term news, he really nailed it, 10, 11, 12 days like that. Then we're on a new story, a new shooting, a new frame. For the short-term news tends to be 10 to 12 days.
That's fascinating. So if you put that in today's world, with the compression of time cycles and the freedom of information, the ubiquitous nature of information everywhere, we're going off on a tangent here, but would you believe that I'd say that 10-day cycle is probably now compressed to 3 days?
No, I don't think so. I think it's still 10, 12 days. People like to agitate themselves. Their football team won this weekend. They're going to talk about it until 10, 11 days from now, at least through the next game. So I think we're still in about that time frame. It's just the emotional high that we like to have about news. So we're going to find whatever the news is. The funeral for the Queen right now. It's going to be, 13 days, something like that. Then we'll go on to another topic.
Okay, good info. So let's talk about psychology investing, because this is a very important topic. And coincidentally, you have incredibly accomplished children. Congratulations on that. But I want to zoom in on your son Jason's book on the personality of winning traders. This is an area where I've done a lot of research, both for myself to help myself and investors identify blind spots. Can you tell us a bit about your take on the psychology and the importance of it and investing? And did what Jason did he pull all that from you, or did he go down blaze his own trail? I'm very interested in that.
Did some very interesting work in his life. One on how we're influenced to get sick by what we believe. Not that we don't really have anything wrong with it, but our belief is that we have something wrong with this. So I talked to him. He says he watched me trade all my life, and he never got interested in trading. But I said, we've done research has been done on losing traders, but nobody's ever done a lot of interviews with consistently winning traders. You got to examine that. So he did, using the tools that he learned at Hopkins, with some major traders. And it was interesting to do scientific personality profiles with these people, interviews with them, and then put together what they had in common. And it was really interesting. They did have really common traits. And when his research was done, those were the opposite of the common traits that the loser traders had. So there's a lot of gold in his book. I look at it myself. I certainly learned. I did a personality profile, and right away he said, "Dad, this is your weakness." It's like, he nailed it. Yeah, he really did. So I think it helps to have somebody show you who you are, so you can develop your strength, but in my case, to overcome weaknesses, which I'm still working on.
Well, do you mind if I double click into that? What is your personality type, and what is your weakness? If you even have any. I didn't think you had any.
Well, I have a lot of weaknesses. We could be here a long time. We're going to talk about my weaknesses. But the big one is I'm not real good with details. I'm not immaculate. I started as an art major, and then I ended up in journalism. So we don't care about facts as journalists. Artists like color outside the lines. So that's my weakness, is not to do really great detailed work. And you have to be detailed to really be good in the market. So that certainly is one of my weaknesses. The emotional things, I think, because I've been doing this so long, I don't get real highs or real lows when I make or lose money. I can pretty much go through that. But my real weakness is my detail sucks, and I really have to work on that.
But that's interesting, because I see you as a highly analytical person that knows enough math to be very dangerous. So you have a great ability to...
I am dangerous. No, I flunked out of math classes. But I don't think you need a lot of math. I know professors that have tried to make money in the market because they think math is perfect and they can make the market perfect. But the markets, as you know, are very random. So you cannot use math to make an imperfect thing perfect. So I don't think you need a lot of fancy math to be a successful trader.
It's funny because this channel, the premise of it, the building block is math and modeling, and that's kind of what I do. So it's interesting. I found ways of kind of analyzing a lot
Well,
of data and finding exceptions.
I
And
think math can be helpful.
yeah,
Math can help find oddities, aberrations in the market, things to take advantage of. It can be very helpful. But to think that you can take and create some mathematical formula that will be make money now and forever, maybe somebody can do it. I've only worked at it for 60 years and haven't been able to do it yet.
yeah.
And I know people a lot smarter than me, and they're in the same boat that I'm in.
Well, that's interesting because you nailed it. I focus on finding aberrations in the market and exploiting those. For example, options pricing inefficiencies, gamma squeezes, that type of thing. That's kind of where I play. That's really cool. Okay, let's jump into the elephant in the room right now. Let's talk a little bit about inflation and Fed hikes. You have a lot of experience. My thesis, real simple. I believe the Fed is boxed in. I believe we are in a very debt controlled market, a house of cards. And if the Fed funds rate goes to 3.5% or 4%, they will break the economy. They're already cracking cracks all over the place. But the obsession with Fed hikes right now is kind of crazy because Fed hikes don't mean anything to companies like Tesla. How do you view inflation, the Fed hikes? What do you think the terminal Fed funds rate will be? And have you ever seen the markets being controlled by the Fed like now, maybe in the Volcker period? But I'd love your take on that.
Well, there's about 9 questions there. I'll try to answer them. When we have Fed hikes, sometimes stock prices go up, sometimes they go down. There's no unanimity that just because there's a Fed hike, prices will go down or go up. So we both agree on that. In terms of the longer term view, I am so outrageously bullish. The Fed is doing exactly what they should be doing. Inflation is going to go down, down, down from here. We are at the peak of the inflation cycle. I want to sell short the inflation ETFs. This inflation game is essentially over. Yeah. And that, I think, has huge information about the gold market and also about the stock market and probably the bond market as well. So if I'm right in my view that inflation, which runs in about a 6-year cycle, we're at the peak, the leading indicators of inflation clearly say we're going to turn to the downside here. Better yet, it's really interesting work the last few days. If you take an algorithm of the inflation cycle we're in right now, CPI index, that pattern has existed before, like in the Jimmy Carter era and the Volcker era in 1990, 1970, and we're in the same pattern now.
Yep.
The pattern is almost an exact fit. We came down here, we went up, and those patterns all top out and inflation comes down. So the pattern, the algorithm fit of what's going on now fits so closely to what we saw in the 70s and the 60s and the 50s, actually, and the 1990s. So I think that this whole thing of inflation, we're going to see lower inflation numbers, which should be bullish for stock prices.
Yeah, I did a video a couple of days ago and I looked at one analog, which is owner's equivalent rent. And literally the data that they're fishing up is 12 to 15 months old. I mean, talk about lagging indicators. Now, the question is, it's apparently something like 300 PhDs work at the Fed. Are they playing games or do they really know where the terminal Fed funds rate is? Or are they just going to look at what they believe are the indicators at a current point in time without taking into account the lag of the data that they are looking at?
No, I think they know what's going on. I have great respect for the Fed, and I didn't used to. I used to be one of those paranoid people that thought the Federal Reserve was screwing up everything. But I think, I just look at the data. You're going back to the 1950s, 60s, 40s. We've only seen one major crash in 1929 prior to the Fed really getting their act together. We've had pullbacks in the market at 15, 20% pullback. Even the crash of 2008 was, 9, 10 months. So I think they've, in actuality, done a really good job of doing their congressional mandate to have full employment and stable economics. I think, considering how wild the stock market can be, I think they've done an admirable job.
Yeah.
Hey, people hate me when I say that, by the way. They don't like that.
And Jerome Powell seems like a very smart man, no doubt about it. But it's just, it's as if some of his talking points and the jawboning, and some of the people that work, the different Fed presidents around the country, they're saying things that just, I don't see them as possible, like hiking through the end of 2023, like 75 basis points, 6-10 times from now. That's just physically impossible with the debt market we have.
Well, do you listen to what they say, or do you look at what they do?
Well, I noticed
Big jawbone for a huge reason, but then I've got to look at the actual data. What concerns me the most right now, frankly, is when the Fed funds rate has started to go down after it's gone up. That's when we really got into recession. That's one of the best recession indicators there is, when Fed funds go down, not up.
Yeah.
So there's some things that disturb me, but I think on balance that the future of America is in front of us, and we're probably starting a 2 to maybe 3 year bull market right here, right now.
Okay. Do you believe the old adage that the bond market tells the truth, or is the bond market broken right now?
I don't think the bond market is broken. I mean, Van Huizington is so much better than I am on the bond market. He's the best record of calling bonds of anybody I know. He doesn't think that it's broken. As long as he doesn't think it's broken, I'm not going to think it's broken.
Awesome.
A lot of what I do is try to find people that are more intelligent than me, follow them. He certainly is one of the most brilliant guys in the bond market.
Excellent. For new investors as well, I know you've written a number of books and you've got lots of great resources. How would you advise them to build their skills and knowledge base for trading?
Look at charts, probably read all the books. Don't believe too much of what these people tell you. Try to figure out for yourself if this works or not. Figure out your own basic, am I a short-term trader, long-term trader, what I want out of the markets? A lot of internal dialogue with yourself, and then say, do I want to be like you, an option guy? Do you understand math real well? Or are you kind of slow thinking like Larry, maybe futures or stocks? How much time do you want to put into this? I put some time into this, as I'm certain you do as well. I mean, this isn't like, 1 minute a day. This is my life. I'm so passionate. I love this stuff. I spend a lot of time doing it just because I'd rather do that than hunter fish. So you have to really work out your own internal dialogue and then find what markets fit that.
Okay, that triggers another question. Where would you focus your time for people who are busy with a 9-to-5 job and wife and kids, or husband and kids, or other stuff?
Get rid of the wife, get rid of the kids, just trade. Come on.
Right. But if somebody only had 4 hours a week to invest, for example, could they still be successful, or is that not enough time?
Well, I think that's plenty of time. Again, depending if you're going to be a long-term stock guy, that's too much time probably. A futures guy, yeah. What I do, I look at the markets on the weekend to see which markets are set up, and then so there's only 2 markets set up. So then during the week, I can look for an entry. So to me, future markets are the ideal thing, but that, of course, just me. But yeah, 4 hours a week is probably, that's enough. To get to that point, your learning curve might be more than 4 hours a week. And if that 4 hours a week of learning becomes a pain, well, then you shouldn't be doing this because you haven't fallen in love with the subject matter.
Okay, let's jump into what I believe is your wheelhouse. So I'd like to ask you about your favorite indicator, or put it another way, which indicator has made you the most money in your experience, if you had to pick one?
I can't point to any one. It's a combination of ingredients. What's made the money is realizing that you go from a conditional setup in the market, fundamentals conditions that set these markets up to move, then bring in the timing tools, technical tools, and it's that combination. I don't use just one indicator, so I can't say, oh, just this one or that one. In my case, my indicators aren't that good. I don't think that there is any one be all end all indicator, but a combination of, this market should rally based on fundamentals, then overlay technicals to get in, out, protect yourself. That's really the indicator that has been so successful for me and for my students who win all the trading championships. They've got some great records, manage money, quit their jobs, run funds and stuff now, and we're all using the same basic idea. The fundamentals drive the markets, technicals time the markets.
Exactly. I would say FA helps you identify what you invest in, and TA helps you time your entry and your exit. Would you agree with that statement?
Yeah, so the whole thing is people read so much into technical analysis. They think that it's the be all end all, and I don't. I think that it can be helpful to an extent for selection. There's a couple of indicators that will say this market should move now, but primarily it's something to time with. My good friend Tom DeMark uses it for timing, and it's so critical that you use, as my dad said when I grew up, the right tool for the right job. If you don't have the right tool, the man with a hammer, as Mark Twain said, everything looks like a nail. Yeah. So a guy with a chart book thinks every trend line is a breakout. It's going to cause a big bull market. No, not necessarily. You have to look at the conditions supporting that.
Exactly. There are some people that are pure technical traders. They are people that look at historical charts, compare them to today's charts, and say, oh, this pattern maps exactly, therefore it's going to continue. I don't get that at all, but there are people that, again, are purely technical. Do you think it's possible to make money consistently by being a purely technical trader?
I don't think it's possible to make money consistently using anything. I don't make money every day or every week. I've had ups and downs in my life. The best traders I know a couple of guys are a lot better than me, and there's no straight path to heaven for them either. So first of all, that's the condition we live in. This is a frustrating business to be right all the time. But if I had my choice, I would want more than just charts. And I think those algorithms people talk about can be helpful, but I've done enough research with them to know you can be very careful. Just because you have this pattern now and you had that pattern in the past on price chart doesn't mean it'll work. Why? Probably is the nature of charting. If you look at charts of the reproduction rate of the northern Canadian lynx in Canada, which I have, it just looks like the price of pork bellies or gold. It's the same chart formations, triangles, breakouts, head, shoulders, all that. So.
Good. Okay, let's jump back to a couple of questions and hope the internet stays with us. Are there any set of indicators or things you look for to trade a bear market, a bull market, or a sideways choppy market? Any particular tips you have for the audience? I personally like choppy sideways markets because I don't have to be worried about missing out on a big run up or a big run down.
Well, that's interesting because we probably have more choppy markets that you like than we have just straight up, straight down markets. You probably have more opportunity, more time. Correct. What I have noticed is I actually like to go long in bear markets because you get explosive rallies to the upside 2-3 days, maybe 5 days, and then it's all over. But so many people say, I won't sell short against or won't buy against a downtrend. I will, because as you've seen some huge rallies in a downtrend. There are a couple of days, but there's massive money. And the same. So I prefer a well-behaved market. It might be well behaved in a trading range, might be well behaved in an up market, but it's not like this. So I'm looking for more well behaved than necessarily a trend.
That's kind of similar. I think what you're trying to say is I think George Soros said once, the worse the situation becomes, the less it takes to turn it around and the bigger the upside. Do you relate to that comment?
Oh, clearly, one of my indicators I call my panic indicator that nailed the exact low this year, the exact low in 2020. It got the low in 2012, the low in 2008. It is based on everybody just getting out of the market, panicking. And so when they're all out, it does not take much to move the market up.
Hmm.
My friend Steve Cohen, I think, has echoed that same comment that you can really come in and buy a lot of stock because it's nobody there, so you're the only guy in the court. You own the court.
Yeah, it's funny because I would honestly say 80% of the sentiment is negative, 20% is positive, and some of the 20% are some of the smartest minds in the space. But when you come out with a positive sentiment or outlook on the market, or you come across as being excited because prices are so low, people sometimes say you're slinging hopium. I don't know if that term resonates with you. It's like you're too optimistic, you're too positive. But I'm glad I found a kindred spirit in you, being excited by these market conditions.
Well, I learned so much from a lot of traders over the years. One is Vic Niederhofer, who's had his ups and downs, but Vic really got me to see that the upward trend of the market, upward bias, upward drift exists. It's real. You look at the stock market trend from 1800 to now, it's basically up all the time. Occasionally we go down. But, since I made my first $1 million on the short side of the market and back in 1970, I just loved to go short. And I finally got, well, wait a minute, I'm going short and not making money because I always thought there'd be the big debacle. That's the gold bugs and the right wing radical conservatives, and I'm more right than most people are. I think Rush Limbaugh was pretty liberal, but we get into this trap mind of the world's going to fall apart. No, it isn't. Relax, sit back. The trend of the market's up. You have a pullback, a big bear market, whatever, 6 months, 8 months. Buy. We're going to go higher. So that's a long-term perspective. Maybe it just comes with age and seeing that the optimists of what have made this country, the world, great. People that see a future.
Yeah, I remember what you just said reminds me of. It was a clip in some war movie. I don't remember which one, but there was a new soldier just came onto the battlefield, and all the existing soldiers were there for like 1 or 2 years already. And a bomb lands beside their little place, and everybody is standing like nothing happened, except for the new guy who jumps to the ground and dives for cover. And it's like the more you've seen, the more calm you become in these adverse situations. Would you say there's an analogy there?
Oh, I sure think so. Because people like to get us all lathered up with news. And I don't own a television set. I haven't watched television for I don't know how many years now.
You like me?
Because it just froths things up. Like,
Yep.
Okay, look, I got my charts, I got my fundamental indicators. Why do I care what Hillary Clinton is doing or Donald Trump or what rap star just got put in prison? I don't care. It doesn't affect my life. It might agitate me, and then I don't like that. So no. Yeah, I think the less exposure you have to emotional stuff, the better you'll do. And if I could just share anything with the young traders, hey, relax. It'll all work out. The trend is up. There is upward bias. Upward drift is real. Had I bought $10,000 of stocks in 1962 when I began, that would now be worth $3.2 million if I bought the Dow Jones Industrial Average and Index for doing nothing, not ever trading, doing nothing at all. Of course, I didn't have $10,000 back then, but and you'd have to upgrade. You can't. If you had bought the 30 stocks in the Dow, you might be broke.
Yeah.
But if you upgraded, as the Dow was upgraded, tossed out some stocks, added in new stocks, 10,000 to $3.2 million without any work. I mean, that's the stock market's the greatest money making machine ever created. If you realize the long-term trend is up, don't get overly bearish. You can't stay bearish for very long.
Interesting take on the stock market. And I'm going to go off on another tangent here. It's about stock picking. If you look at the last 10 years, the top 1% to the top 2% of the S&P 500 garnered 50% of the returns. So that means, say, 98% does below average. Do you believe in that? And do you believe you need to be not necessarily in an index unless you're just trading the flow, but stock picking per se?
Well, I think the average person should just be in an index stock, and I would prefer one that's a value stocks. I know in all the research we've done, and I have done a lot of research on this area, momentum stocks growth stocks don't outperform value stocks. And we see that this year in particular because the growth stocks, the momentum stocks got crashed this year. So now they're down 30, 40%. They've got to come up that much before they're back in the black, whereas the value stocks only came down 10%. They go up 10% and they're back in the black again. So my long-term preference is actually value stocks as opposed to growth stocks. But more importantly, I think that there's a group of easy stocks. Stay away from the flashy stocks of the day, the Nifty 50, whatever. You want to be in companies that sell stuff to consumers, Procter & Gamble's, Clorox, Fastenal, JKH Henry, Costco. These stocks don't go crazy. They don't fall apart like Facebook and some of these other stocks have done. So I'm looking for stocks that are not on the front burner now, because those stocks will get burned and collapse. So I'm more in stable, consumer-driven stocks. I think that's the best long-term bet in the marketplace.
Good stuff. Good information. Getting back to your panic indicator, what are the ingredients of that? It's kind of sparks.
Everybody wants to know that. But let's say what causes people. What is a sign of people panicking?
Social sentiment.
A big thing is that we have huge, massive increases in daily ranges or weekly ranges. So the size of the ranges show panic. Markets decline on large ranges. Look at the VIX index.
Yep.
And they rally on small ranges. Massive volume in the market would be another example of panicking. No stocks advancing today, or what we call plurality, when the net number of difference between advancing stocks and declining stocks is usually a pretty big number. When there's zero on that, in other words, all the stocks move today, that's a sign of emotional exuberance. So there's a lot of technical stuff you can put into the indicator, and anybody can do this, that shows when people are at an extreme, their buying or their selling is at such an extreme. As you said earlier, now it doesn't take much to turn things around because we've lost all of the sellers. My really dear friend Tom DeMark has always put it that we don't bottom because buyers come in. We bottom, we run out of sellers.
Exactly.
Nobody's left to sell. So when you can say there's no sellers left, what are you going to do? You're going to rally. So you really need to, when there's no seller, nobody can sell, no sellers left, you got to be a buyer.
So once you said you were a conditional trader, is that similar to what I call finding confluence between indicators, or does it have a different definition?
You probably said it better than I did. I'm a conditional trader. I look for conditions, and then I bring in other stuff, as we mentioned, to help me get in or out of that position. So I'm not just technical, not just fundamental. I think conditions drive the markets. Clearly, when the price of crude oil goes way up, you're going to see an increase in inflation shortly thereafter. If bond markets do one thing, stock market's going to do one thing. These conditions are fundamental. The real conditions, they really exist. So I want to find those conditions and then look at your chart, whatever technical stuff you want to look at.
Okay, cool. This is a question that came in from one of my community members. And I know you probably won't like being put on the spot, but if you had to pick 5 TA indicators, and I know you have a bunch that you've built yourself, what would they be and how would you prioritize their importance?
It depends if it was for stocks or commodities.
Okay.
If it was for commodities, I'd want the commitment to trader report. I would want the seasonal pattern. I would want my valuation index and some form of trend following index, and maybe one indicator called a pinch punch. For stocks, I don't have the commitment to trader report. So I'm out of that. So I would want a couple of my other indicators that measure accumulation when big money is coming in buying these stocks. I want an accumulation measure. The seasonality cycles, I like to run a cycle study on the stock. Maybe a comparison. Costco sales seem to be influenced, or their price, by what happens to the dollar index. So if a company is in heavy debt, the relationship of bonds to that stock is going to be significant. If interest rates go way up, they're going to pay more money on rates. They're not going to be as profitable as a company. So those intermarket relationships would be significant in the stock market.
That's awesome. A lot of golden nuggets there. Another thing you said once, which I loved, and I see this a lot, especially on things like Twitter. You've got these people with 1,000 different lines on a chart, which just it makes me blind. But talk to me about death by indicators. I've always said in my life, less is more. Didn't you say death by indicators once?
Well, first of all, what's Twitter?
There you go. Twitter, I call it.
Yeah, I think that there is death by indicators. People will show me their charts. I go, oh my gosh, you got 20 indicators, and they're all the same. They have my percent R, Bollinger percent B, stochastic, my good friend Jerry Appel's MACD. They're all the same indicator. Like, hey guys, they're all going to tell you the same message. You need an indicator for cycles, an indicator for accumulation, an indicator for overbought, oversold. So yeah, most traders don't make very much money. Most lose for a couple of reasons. I can get into that later. One is just technical, but there's another one as well. But their indicators are redundant. And you need that if you have an airplane. You need redundancy in your instruments. But on your chart, each indicator should serve a specific purpose. If I'm going to go for a run, I'm trying to train for the Senior Olympics in Montana again. Each workout is for a specific purpose. Endurance, jumping, whatever it is. And same with indicators. Each one should have a specific purpose. They can't all be the same.
Yeah, in fact, another thing that's fascinating about you is, you've been doing this for so long. What keeps us so sharp? Is it your athleticism on the side, your marathon running, your health?
I think I'm starting to lose it a little bit now, frankly. I don't see things as quickly. Sometimes I stutter in my words a little bit more than I have in the past. So, it's hard to acknowledge that, but I can see there's some changes here. It's one reason I don't publish a newsletter anymore. I used to do daily hotlines. How could I ever do that? I could never do that now. I did a weekly commentary. I could never do that now. So I don't know, but I do believe that wealth is not health. One of my very, very best friends, I ran maybe 20, 30 marathons with, a multi-millionaire guy, got really sick. And he said, Williams, I would give you all my money for just one day to feel good, just one day. Wow. And that meant so much to me. And I've always been kind of a health freak guy because I've got children. I like to live a long time. The longer you live, guess what? The longer you can trade. So I want to live a while. And so I do try to stay healthy and watch things, but still, old man age taps on my shoulder. He's still around the corner there. I know that.
Well, you're sharp as a tack, and we're just ad-libbing here, and you've nailed every single question so far, and I'm throwing some curveballs at you. So, but it's amazing. I always say the big mantra of this channel is health is wealth, and I blogged about cancer and cancer prevention for a decade. Nobody cared. Both my parents died of cancer when I was very young, and I was obsessed with, how can we prevent this thing? But nobody cares. And then I started investing channel. Everybody cares. So it's funny. People don't care about health until it's too late. So that's probably a very, very important message. Again, another tangent we go off on. But this is
that it's an important tangent, because if you're not healthy, you probably won't trade well. And I had a doctor explain it to me, Barney Meltzer, when I lived in Del Mar in Rancho Santa Fe in California. Barney said, Larry, I was actually heavy at that point. He said, your line is starting to go down like this. He said, this is probably like the stock market. If it keeps going down, you can't pull it back up. And I realized, I had to lose weight, change my lifestyle to bring that line back up, because I see people that don't take care of their health, and that line curves down, and it's a bear market. And they get, they're my age, or they're obese, they don't exercise, and you know what? They can't pull it back up. Yeah. They've gone over the precipice, and they can't turn it around. So to me, that's always been kind of like the stock market. That, my trend's going down. I had to pull it up and keep it going to the upside, or you will go into that decline.
Yeah, this is so important. And these are all these life lessons that are just so critical that people just don't pay attention to till it's too late. So thank you for sharing that. Let's get